Welcome, everyone, and thank you for joining us. Today's session is Workplace Violence Prevention and Security in Banking and Finance, HR, OSHA, and Branch Readiness Essentials. This program is built for the people who actually carry this work inside a financial institution. Banking HR, branch and regional leaders, security and physical security teams, compliance and risk, operations, legal and employee relations, EHS, facilities, training, and internal audit. If you sit in any of those seats, this hour is designed for you. Before we begin, one note we'll come back to throughout. Everything we cover today is educational. It is not legal advice. Workplace violence touches areas: discipline, terminations, investigations, restraining orders, and state-specific obligations, where you should verify current federal, state, and regulator-specific requirements and consult your own counsel before you act. With that said, let's set the stage for why this topic matters right now. Here is the honest starting point. In banking and finance, this issue never really goes away. The risk is built into normal, everyday work. Think about what your customer-facing teams do all day. They handle money. They enforce cash handling controls. They tell customers no. A loan is denied. An account is frozen during a fraud review. An overdraft dispute doesn't go the customer's way. Each of those moments can turn a routine interaction into a tense one. And it isn't only the teller line. Call center and back office teams take the same frustration over the phone. Public branches mean open access to your lobby. Robbery-related fear and emergency events affect people long after the event itself is over. So attention to this topic tends to spike after an incident or a drill, and then quiet down. But the underlying exposure is steady and constant. That's exactly why the right response is calm preparedness, not alarm. Our goal today is preparedness across 3 stages: preventing incidents, responding well when they happen, and recovering afterward. Not fear, readiness. Let me give you the roadmap so you know the payoff by the end of the hour. First, what workplace violence actually looks like in banking and finance, the full range, well beyond robbery alone. Second, who owns prevention? The short answer is not just HR, it's a shared responsibility, and we'll map it out. Third, how OSHA workplace safety concepts connect to banking security procedures, 2 layers that work together. Fourth, what teams commonly miss, the gaps that branch, HR, security, compliance, and operations tend to overlook until an incident exposes them. And fifth, the part that makes this practical, the specific remedies you should implement across prevention, response, and recovery. That last point matters. We won't just describe risks. We'll end with concrete actions organized by problem, owner, and the evidence to keep, so every role here can act, not just discuss. This slide is the frame for everything that follows, so let me be precise. It would be easy and wrong to package this topic as an OSHA rule for banks, or as just robbery prevention, or as a fear-based, crime-focused talk. None of those framings is safe or accurate, and none of them is genuinely useful to you. The better framing is a combined, practical readiness program. Picture 5 pieces working together: HR, OSHA workplace safety, branch security, banking operations, and incident response readiness. Workplace violence prevention lives at the intersection of all 5, not inside any single rule or department. We will use current market conversation later to show why the topic is timely. But hear this clearly. Market chatter shows relevance. It does not set your obligations. Every compliance obligation we mention stays anchored to official sources. Keep those 2 things in separate buckets, and you'll stay on solid ground. Let's define the thing clearly, because workplace violence is much broader than most people assume. When people hear the phrase, they picture an armed robbery. But the large majority of incidents are not that. They are customer aggression, verbal threats, intimidation, and harassment, behaviors that often build over time before anyone formally reports them. The full spectrum on your screen includes all of those, plus robbery-related fear, bomb threats, domestic violence spillover into the workplace, threats from former employees, threats received by call center staff, and the post-incident trauma that lingers after any serious event. Why start here? Because you cannot prevent what you don't recognize. If your people only think of violence as a masked robber, they'll miss the slow-building threat, the repeat caller, or the ex-employee who keeps showing up. Recognizing the whole range is the first real step toward preventing it. So why does this industry carry a distinct level of exposure? Because several risk factors stack on top of each other at the same time. On one side, your employees handle money and enforce cash handling controls. Fraud disputes, account freezes, and holds create predictable flashpoints. Denied service, loan refusals, account closures, overdraft disputes put staff in the position of delivering bad news. And public-facing branches mean nearly anyone can walk in off the street. On the other side, those factors intensify the risk. Customers are already frustrated during restrictions and escalations. Your people must protect confidential financial information at the same time. The sheer volume of customer service across branches and phones multiplies the odds, and multi-location and after-hours work widen the surface even further. One reminder that's easy to forget: this is not a teller window problem. Call centers, back-office finance teams, and hybrid or work-from-home staff all need clear reporting and escalation paths too. If your program stops at the branch lobby, it has a gap. Here's one of the most important ideas in the whole session. No single team owns workplace violence prevention. What usually happens is a quiet game of hot potato. HR assumes security owns it. Security assumes branch managers own it. Operations is focused on keeping the doors open and reopening quickly. And so the spaces between departments, which is exactly where incidents live, go unowned. The program only works when these 10 functions coordinate around one shared plan. HR, branch leadership, security, compliance and risk, operations, legal and employee relations, EHS and safety, facilities, training, and internal audit. Over the next several slides, we'll walk through what each of these groups actually owns, starting with the primary owners, then the supporting functions. As we go, ask yourself one question. For each responsibility, is it clearly assigned at How Do We Know, or is it sitting in the gap? Let's start with HR, because HR is the connective tissue of this entire program, before, during, and after an incident. HR owns the workplace violence policy itself, the definitions, and the reporting process that makes it easy and safe for an employee to raise a concern. HR runs threat intake, conducts investigations, and applies discipline that is consistent and well documented. HR coordinates the people-side logistics that follow: leave, accommodations, and workers' compensation matters. And HR provides support, employee assistance referrals, and a thoughtful, safe return to work plan. After a serious event, HR leads controlled, accurate communication, telling people what they need for safety without oversharing. If there's one message for HR, it's this: consistency and documentation are what protect both your employees and the institution. The same situation should be handled the same way every time, and every step should leave a record. Next, branch managers and regional leaders. These are your first operational leaders on the scene when a situation escalates, and what they do in the first few minutes matters enormously. Their job is to recognize warning signs and respond to customer aggression on the floor, to lead de-escalation and protect employees during high-risk interactions, to know when to call security or law enforcement, and just as important, when to disengage. to preserve evidence and notify HR and security promptly and correctly, and to make sound decisions about closing or reopening a location. Here's the common gap: managers who aren't sure when to de-escalate versus call for help, how to preserve evidence, or whether to close or reopen. Under stress, uncertainty becomes hesitation, and hesitation is dangerous. The fix is simple to say and powerful in practice. Give your branch leaders consistent, repeatable steps so they never have to improvise in the worst moment of their day. Now, security and physical security teams. They own the physical controls that have to actually work when it counts. That means alarms, cameras, access control, and visitor procedures. Coordinating guards, security vendors, and regular branch layout reviews. Leading robbery response procedures and emergency coordination. And supporting evidence preservation and law enforcement coordination after an event. But here is the failure we see most often. The controls exist on paper, while employees don't actually know how to use them under pressure. A camera no one reviews, an alarm no one is trained to trigger, a visitor procedure no one follows. Those aren't protection, they're paperwork. So the key message for security is integration. Connect your physical controls to employee training, to HR reporting, to branch operations, and to regulatory readiness. Hardware plus trained people is what makes a control real. Compliance and risk teams turn all of this from a one-off HR matter into a measurable operational risk and control issue, and that shift is valuable. Their work is to frame workplace violence as an operational risk topic, to maintain the policy, documentation, and training records evidence, to run incident trend reviews and corrective action tracking, to prepare audit and regulator readiness evidence, and to confirm that the program's elements align with the requirements that apply to your institution. Think of compliance and risk as the team that asks, can we prove it? Can we prove training happened? That alarms were tested? That incidents were logged and corrective actions were closed? An incident almost always exposes gaps in training, risk assessment, reporting, or response. The advantage of strong compliance and risk involvement is that they can find and close many of those gaps in advance, instead of discovering them the hard way. Operations leaders decide whether your safety procedures survive contact with daily reality, and that makes them essential. Their responsibility is to make procedures realistic for branches, call centers, and the back office, to account for staffing, customer service workflows, and wait times, to address after-hours work and lone worker situations, to embed safety directly into the workflows where risk actually shows up, account freezes, fraud calls, denied service, and to build business continuity and safe reopening into operations. Here's the practical truth. If a safety procedure interrupts the workflow, or is unclear, or just isn't realistic, employees will quietly skip it. A procedure that gets bypassed protects no one. So operations should map risk into the real workflows your people use every day, and design steps they can genuinely follow in a live situation, not just steps that look good in a binder. Beyond the primary owners, 6 supporting functions make the program durable, and each one has a clear job. Legal and employee relations handle the highest risk cases: threat intake, high-risk terminations, restraining order issues, escalation triggers, privilege, and documentation. EHS and safety own hazard assessment, the prevention program elements, inspection readiness, and corrective action tracking. Internal audit is the team that proves the controls actually work, testing training files, alarm tests, incident forms, and whether corrective actions were truly closed. Facilities and real estate control the physical environment: branch design, lighting, parking lot safety, barriers, access controls, and visitor management. Call center leaders manage the phone-based side: threat escalation, call documentation, employee support, security referral, and repeat customer controls. And training and learning teams convert policy into behavior through scenario-based modules, drills, manager simulations, and annual refreshers. The point of naming each one is simple. Every group here should leave today knowing the specific thing they can fix. Now let's connect this to OSHA in plain HR-friendly terms. OSHA treats workplace violence as a workplace safety hazard topic, and the way OSHA describes it is broad. It covers threats and threatening behavior, harassment and intimidation, verbal abuse, physical assault, and other disruptive, aggressive conduct at work. Notice that most of that list is not physical violence. It's the behavior that comes before. The practical takeaways will feel familiar if you've worked in safety before. They're the standard elements of managing any hazard. Assess where the risk is highest. Write a clear prevention plan and policy. Train your people by role. Build reporting channels. Respond to incidents and take corrective action, and keep good records. For now, treat this as guidance to understand and to model your program on. On the very next slide, we add an important caution about how far you should, and should not, go in describing this as a requirement. This is a slide to speak carefully on, so let me state it plainly. There is no single federal OSHA workplace violence standard that applies to all banking and finance employers. So please don't claim, and don't let your materials imply that one general rule covers every bank. That overstatement is a common mistake, and it's one to avoid. Here's the careful part. Even without a specific standard, recognized serious hazards may still be evaluated under what's known as the General Duty Clause, when feasible controls exist. In everyday terms, this matters most for an employer that ignores repeated threats or known security gaps, because those are the situations where a recognized, serious, addressable hazard is being left unaddressed. I'll say it once more, clearly. This is educational, not legal advice. Present the General Duty Clause as a possible source of exposure for recognized serious hazards, not as a blanket banking requirement. For how it might apply to your specific operations, that's a conversation for your counsel. Sitting alongside the OSHA safety layer is a second layer that's specific to financial institutions: banking security requirements. For covered institutions, security procedures may be needed that are designed to discourage robberies, burglaries, and larcenies, and to help identify offenders. In practice, that can include a designated security officer responsible for the program, a written program documenting procedures and responsibilities, tested alarms and panic alarms, surveillance cameras with reviewed blind spots, and access control with employee-only areas and visitor procedures. But notice the through line that connects this to everything we've said. The sixth element is employee readiness. A written program and good hardware only protect people if your staff are trained and ready to use them. Paper plus equipment plus trained people. That's real branch readiness. One verification point before you state any specific obligation. Confirm how your institution is supervised, whether that's the OCC, the Federal Reserve, the FDIC, or the NCUA, because that determines which security program requirements actually apply to you. Some states impose specific obligations, things like a written plan, training, an incident log, and record keeping. California is the leading example of a state with detailed workplace violence prevention requirements. But, and this is the key caution, obligations differ from state to state, and each one has to be confirmed for the jurisdiction you're actually operating in. If you're a multi-state employer, the practical move is to maintain a jurisdiction checklist and to verify the plan, training, incident log, and record-keeping rules everywhere you operate before you finalize policy or training. Two things to avoid. Don't assume California's requirements apply elsewhere, and don't assume another state has none. State-specific claims need separate verification for each location, and your policy and training language should get a counsel review before publication. Now for the market context layer, and I want to frame it carefully before we look at it. These themes come from current U.S. public and market discussion about workplace violence in financial services. We use them for one reason only, to show why this topic is timely and practical right now. They are not legal authority and they are not verified facts. Treat them as the conversation, not the rule. With that label firmly in place, 6 themes keep surfacing. 1. Attention is incident-driven, moderate most of the time, then spiking after a real incident or a drill. 2. A lot of discussion about active shooter and bomb threat training, and run, hide, fight concepts. 3. Law enforcement coordination. Police, the FBI, bomb squads, negotiators, and bank leadership working together. 4. Workplace violence framed as enterprise risk management and duty of care, not just HR policy. 5. Physical and procedural security. Access controls, cameras, panic buttons, branch design. And 6. A generally balanced professional tone rather than an alarmist one. We'll borrow that balanced tone, and we'll keep every actual obligation tied to official sources. People will sometimes reach for a recent headline to make this topic feel real. If you do that, do it carefully. And let me model how. Public reporting described a June 2026 hostage standoff in a downtown Bakersfield office building that housed a Chase Bank branch. Some reports noted that the hostages were employees of the Kern County Superintendent of Schools. So here's the discipline. Do not claim that all the hostages were bank employees unless a verified source confirms it. When you cite a real event, you state only what's verified, nothing more. And honestly, the precise victim count isn't the lesson anyway. The real transferable lesson is branch and building readiness. Lockdown and evacuation decisions, law enforcement coordination, clear communication, reuniting employees afterward, and post-incident recovery. Use an example like this to illustrate why preparedness matters, never to dramatize or to frighten. The takeaway is readiness, not fear. Let's make this concrete with 6 short scenarios drawn straight from financial services life. Here's the first. A fraud review triggers an account freeze. The customer is now standing at the teller window, and the conversation turns into a threat. What should happen? The branch manager leads. De-escalate, create distance, move staff to safety, and decide whether to disengage entirely. Security stands ready to respond, reviews camera coverage, and preserves the footage. HR captures the incident report and arranges support for the affected employee. And compliance logs the incident and considers, where appropriate, a customer restriction process with legal review. One principle runs underneath all of it. No employee should be required to keep serving a threatening customer just to protect the customer experience. Safety comes before the transaction, every time. Scenario 2. A former employee returns to a branch after termination and demands to speak with the manager. Most of the safety in this situation is actually created before this moment through high-risk termination planning. HR and legal should prepare that plan, including a response plan for the possibility that the person shows up on site. IT and access management confirm that system and badge access were removed promptly. Not next week, promptly. Security and facilities apply visitor controls and alert reception and branch leaders. And if the threat is credible or immediate, escalate to law enforcement and keep employees away from any confrontation. The single rule to remember: never let a manager handle a potentially dangerous individual alone in a private office. This is a team response, planned in advance, not a solo improvisation in the moment. Scenario 3 takes us off the branch floor. A call center employee is receiving repeated threats from the same customer. First, keep the employee safe and have them capture the exact threat language using a script. Exact words matter. Operations and HR escalate through a defined threat process and provide real support to the employee. Security and compliance flag the account and apply repeat customer controls where appropriate. And legal reviews serious or persistent threats and approves any account restrictions. The mindset shift here is important. Phone-based threats are real workplace violence. They are not just customer service stress to be absorbed. Treating repeated threats as normal is how you burn out and lose good people. And remember the scope. Call centers, back office finance teams, and remote staff are all inside this program, not outside it. Scenario 4 is one of the most common and most preventable gaps we see. A branch has a panic alarm, but employees aren't sure when or how to use it. This is the controls on paper problem made real. A panic alarm nobody knows how to trigger is not protection. The fix is shared. Security tests alarms on a schedule and verifies camera and access coverage. Training teams run drills and teach people both when and how to trigger an alarm. Branch managers use branch checklists and keep training records as proof that instruction actually happened. And operations assigns clear responsibility for testing and follow-up, so it's someone's job, not no one's. The lesson generalizes far beyond alarms. Any physical control fails without training and proof. Test it, train it, and keep the record. Scenario 5 is a sensitive one, and it calls for a confidential, supportive response. An employee reports that a domestic violence situation may follow them to work. HR and employee relations build a confidential workplace safety plan and consider schedule or location adjustments. Security and facilities set access control alerts and reception guidance, and may arrange parking support. HR offers an employee assistance referral and leave options as applicable. And where appropriate, the institution coordinates with law enforcement. There is one thing to protect above all here: confidentiality. Do not broadcast an employee's sensitive personal details across the workplace. Information goes only to the people who genuinely need it to keep that person safe. Handled well, this scenario shows employees that raising a frightening personal situation at work will be met with support and discretion, not exposure. Our sixth scenario is about the hours after a serious event. There's been a robbery attempt, and the pressure is on to reopen quickly. The danger is focusing only on business continuity. So slow down just enough. HR and operations address employee trauma and readiness before resuming. Security preserves evidence and confirms law enforcement clearance. Compliance documents the investigation and the corrective actions taken. And leadership makes the reopening decision based on safety and readiness, not on business pressure alone. Build safe return-to-work planning right into the recovery. The people who were there need to know the institution is taking care of them, not just reopening the doors. This scenario is also our bridge into the heart of the session, because every one of these 6 situations has a remedy. Let's turn to those now. This table is the centerpiece of the program because it converts risk into action. For each problem, we pair a practical remedy, a clear owner, and the evidence to keep. Take a few rows. Customer aggression after a freeze or a denial. The remedy is a de-escalation and escalation workflow, owned by branch, HR, and security, with incident reports and training logs as evidence. A robbery or bomb threat, emergency procedures and drills based on your risk assessment, owned by security, branch, and operations, evidenced by drill logs, alarm tests, and reviews. Controls that staff don't understand. Test them, train their use, assign responsibility, evidenced by alarm test logs and training rosters. And multi-state compliance gaps, a jurisdiction checklist, verified before you finalize anything, evidenced by a state law matrix and council review. Notice that fourth column. The evidence to keep is what makes your program defensible and auditable. A remedy you can't prove you implemented is, in practice, a remedy you may not get credit for. Assign an owner to every row and decide what evidence each one produces. Now, let's organize the remedies by stage. Stage 1 is prevention. Everything you do before anything happens. There are 7 moves here. First, a risk assessment. Map where risk concentrates. The lobby, the teller area, cash points, parking, ATMs, the call center, and after-hours work. Second, a written plan and policy that defines violence, threats, and weapons, and spells out reporting channels, non-retaliation, and emergency response. Third, role-based training, because a teller, a call center agent, a branch manager, an HR business partner, a security officer, and an operations leader do not need the same training depth. They need their own steps. Fourth, de-escalation and disengagement. Teach people to stay calm, keep distance, end unsafe interactions, and put safety ahead of completing the transaction. Fifth, a physical security review of alarms, cameras, badges, lighting, barriers, visitor controls, and branch blind spots. Sixth, a controlled customer restriction process for customers who threaten or repeatedly abuse staff, built with legal review. And seventh, law enforcement relationships. Know your local contacts, their response expectations, and who inside your organization communicates with responders. Prevention isn't one thing. It's these 7 working together. Stage 2 is response. What to do in the moment. This do and do not table gives your people clear behavior under pressure across 6 incident types, and one principle runs through every single row. Prioritize life safety. Over money, over the customer experience, over speed. For an aggressive customer, move staff away, call a manager or security, de-escalate without arguing, and document. And do not require staff to keep serving a threatening customer. For a robbery or weapon-related threat, prioritize life safety. Avoid heroics. Activate the alarm only if it's safe and you're trained. And contact law enforcement. And do not chase the suspect, block exits, or put money over safety. For a bomb threat or suspicious package, follow evacuation or shelter steps. Notify responders and preserve threat details. And do not dismiss it as a prank or send untrained staff to inspect it. For a former employee threat, notify security and leadership, restrict access, keep staff away, and call police if it's credible. And do not let a manager handle the person alone. For a call center threat, keep the employee safe, capture the exact wording, escalate, flag repeats, and support the employee. And do not treat repeated threats as normal stress. And for domestic violence spillover, activate the safety plan, protect confidentiality, alert security, and coordinate with police. And do not share sensitive details across the workplace. That what not to do column prevents the most common dangerous mistakes. Stage 3 is recovery, and it deserves as much attention as prevention. 7 steps in roughly this order. Start with employee support. Check for injury and trauma and address employee assistance, leave, workers' compensation, and a safe return to work. People first. Then the incident investigation. Collect facts, witness statements, camera and access records, and call recordings where relevant. Evidence preservation. Keep video, alarm and visitor logs, messages, and forms according to your retention rules. Corrective action. Fix what failed, whether that's alarms, lighting, staffing, training, escalation timing, or policy clarity. Communication. Share what employees need for safety without unnecessary confidential detail. The reopening decision. Confirm clearance, employee readiness, physical safety, and staffing before you resume. And finally, an after-action review. A structured look at what worked, what failed, who owns each fix, and by when. That last step closes the loop. Recovery feeds directly back into prevention, so the same gap doesn't open twice. Let's bring it together with a practical checklist you can take back to your institution. Review your exposure points: branch, ATM, parking, and after hours. Update your policy and the reporting process. Assign ownership across all the functions we mapped. Train by role, not one size fits all. Test your physical controls and keep the proof. Create protocols for high-risk situations. Build a post-incident response checklist. Track incidents and near misses so you can see patterns. Verify state-specific requirements wherever you operate. And review the whole program at least annually and after any serious incident. Here is the core message to leave with. The remedy is not just more cameras or one written policy on a shelf. The real remedy is a connected system. Identify risks, train by role, make reporting easy, test your controls, involve the right departments early, support employees after incidents, and document corrective action across HR, branch operations, security, compliance, legal, facilities, training, and leadership. And the reminder we started with, because it bears repeating. Today's session is educational, not legal advice. Verify your federal, state, and regulator-specific requirements, and consult counsel for legal decisions, including investigations, restraining order issues, discipline, terminations, and state-specific obligations. Thank you for spending this hour on a topic that protects your people, your customers, and your institution. Back to you.